Welcome to Stock World, where we break down the latest financial news, market insights, and stock analysis to keep you ahead in the world of investing. So, today we've got some significant news for UnitedHealth stockholders. A major investigation is reportedly underway, and it could have serious implications for the company's stock and future growth. I'll break down everything you need to know about this potential Department of Justice probe, what it means for UnitedHealth, and how it might impact the company's financial outlook. So, if you're an investor or just keeping an eye on the markets, make sure to stick around for all the details. We have some significant news today for UnitedHealth stock investors. A recent report from the Wall Street Journal has revealed that the U.S. Department of Justice DOJ is reportedly overseeing a serious investigation into UnitedHealth's business practices, specifically focusing on its Medicare Advantage segment. I'll walk you through the details of this unfolding situation, what it might mean for UnitedHealth's stock. Let's start with the core of the investigation. According to the Wall Street Journal, the DOJ's criminal division, specifically its healthcare fraud unit, has been actively investigating UnitedHealth's Medicare Advantage operations since last summer. This particular unit is known for targeting complex schemes involving fraudulent claims, kickbacks, and other illegal tactics that can lead to inflated Medicare and Medicaid reimbursements. These kinds of probes can have serious financial and reputational consequences for companies, potentially leading to hefty fines, restrictive settlements, or even criminal charges if misconduct is proven. Adding to this turbulence, UnitedHealth stock has been under severe pressure. Just a few days ago, shares of the company fell by 18% following the sudden resignation of its CEO and the decision to suspend its 2025 financial guidance. This comes after a broader decline of nearly 40% in the company's stock price this year alone. Following the news of the DOJ investigation, the stock took another 14% hit, reflecting a significant loss of investor confidence. However, UnitedHealth has denied these allegations, stating that it has not been formally notified of any criminal investigation by the DOJ. In a public statement, the company dismissed the Wall Street Journal's report as lacking official attribution and being based on unverified claims. Despite this, the Wall Street Journal remains a credible news source, and the very possibility of such an investigation can be enough to unsettle both investors and analysts. Given the potential for increased financial and reputational risk, I decided to update my discounted cash flow DCF model for UnitedHealth to reflect this new information. For those unfamiliar with the process, a DCF model is a method used to estimate the intrinsic value of a company based on its expected future cash flows, adjusted for risk. One of the key metrics in this model is a company's beta, which measures the volatility of its stock relative to the broader market. This beta feeds into the weighted average cost of capital WCC, a critical factor in determining the present value of those future cash flows. Typically, I rely on beta values from financial data sources like Yahoo Finance or Google Finance, where this metric is either directly reported or can be calculated based on historical price movements. However, in situations like this where a company's risk profile is rapidly changing, a simple historical beta may not fully capture the current level of risk. Therefore, I decided to adjust UnitedHealth's beta from 0.8 to 1.2, reflecting a 50% increase in perceived risk. This adjustment alone significantly reduced my intrinsic value estimate for the stock, as a higher beta means a higher WCC, which in turn reduces the present value of future cash flows. Before this news broke, my model had estimated UnitedHealth's intrinsic value at roughly $688 per share. With a revised beta, this estimate has now dropped to around $539 per share, a significant decline that highlights the potential impact of this investigation. It's a clear example of how quickly market sentiment and risk assessments can change in response to new information. Moreover, the broader healthcare sector itself is facing significant headwinds. The U.S. government has announced plans to cut Medicare and Medicaid spending in 2025 as part of a broader effort to reduce federal health care costs. This is particularly concerning for companies like UnitedHealth that rely heavily on government-funded programs for a substantial portion of their revenue. Additionally, UnitedHealth is grappling with rising costs as more patients utilize its services, further squeezing profit margins. The company's 52-week stock price range tells the story of this decline. Just a year ago, the stock was trading near a high of $630 per share. but it has recently approached its 52-week low of around $248, reflecting a dramatic loss in market value. In summary, while the full extent of this DOJ investigation remains uncertain, the potential financial and reputational damage is enough to warrant a significant risk adjustment in my valuation model. As I continue to monitor this situation, further changes may be necessary as more information becomes available. For now, I've taken a conservative approach to reflect this heightened risk, which is a prudent strategy given the circumstances. Thanks for watching my YouTube channel. If you found this analysis helpful, don't forget to like, share, and subscribe for more in-depth market updates. Stay tuned for our next video.